The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 30th marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody out there had a fantastic weekend. Should be a interesting week out here. Let's go take a look at one of our tools. This is the tool I call the secret to being happy. 4 key words, folks. 4 key words that you should write down. Take out your pen and paper. Write down these 4 words. Number 1, potential. Number 2, action. Number 3, results. And number 4, belief. You know, happiness boils down to being happy about who we become. And who we become is controlled by our primary question. You see, each of us has a primary question in life, whether we know it or not, and therefore we must consciously know our primary question because it literally controls our life. In fact, our driving force, yours and mine, our driving force in life is a result of our primary question. And some of us have empowering questions, and others, they've got disempowering ones. Now, a disempowering question usually boils down to one of 2 things, either what's wrong with me or why am I not loved? Disempowering questions are usually some derivative of either of these. You know, the fear associated with not being enough or not being loved, folks, it's real. It's so real that it stops incredibly gifted and talented people from moving forward. If this is your primary question, then you know what I'm talking about, because it'll stop you dead in your tracks like a deer in a headlight, and it'll stop you from taking the action needed to move forward, the actions needed to living in a happy state of mind. The secret to being happy? Get rid of that question and instead replace it with an empowering one. For me, my question is, and it's an empowering one, as you could have guessed, my question is, how can I be the intelligence behind financial freedom? It's the driving force behind everything that I share with you each morning, and subscribers to my newsletter service, they see my passion each day in an investment and trading newsletter, the likes of which are far and few between. Yes, folks, happiness boils down to being happy about who we have become. And I consider myself to be a very happy person. Now, that doesn't mean that I live the golden life. It doesn't mean that I have no troubles. It doesn't mean that I don't have to deal with the same type of circumstances that happen to each of you. Circumstances, folks, they're like the wind. They happen to each of us. And yes, I too have got to fight those demons of those disempowering questions that crop up every now and then. You know, the fear of not being enough or the fear of not being loved. But nope. Don't let those get into my mind. I'm a slayer of those types of thoughts. Now, knowing or creating an empowering question is just the beginning, but it is the key to even having a beginning. So after you've got an empowering question, you should know what yours are. You should write them down. Next comes motivation. And so the real question is, how does one motivate themselves, especially when the world throws curveballs at you? You know, when the world is testing you to see and say to you, just how badly do you really want what it is that you believe you want in life? Motivation, folks, that is something that you and I must master each day. So here's a formula. Write this down. Motivation Motivation occurs the moment we recognize our potential. Motivation occurs the moment that we recognize our potential. Question, if I found a trade that had a 10-to-1 reward to risk versus one that had a 3-to-1 reward to risk, which one would motivate you? Which one? Of course, the 10-to-1. And the reason? Because it has more potential. Therefore, you must always first start with identifying your potential, just like we do in trading. You must do it all the time. Always identify your potential. Put those things, put all of that into your memo pad on your phones, your pads out there, especially as we begin the ritual of our New Year's resolutions. How resolute are you going to be about your New Year's resolution? If you'd like to be more resolute, it becomes pretty simple. Have you identified your potential? So look, if you're not happy with your physical self, maybe it's your weight, your strength, your health, focus on your potential. What does that potential look like? Maybe you're not happy with your finances, your career, your job, your trading, your investing. Focus on your potential. What does that potential look like? Maybe you're not happy with your relationships, your boss, your coworkers, friends, families. Focus on your potential. What does that look like? Here's the truth. The truth is you have way more potential than you give yourself credit for. And even if you're one of those people that give yourself a lot of credit for a lot of potential, there's always more in the bank, folks. These are the secrets to being happy. Potential, of course, that'll force you to take action. You'll get a result, and then that'll reinforce your belief system, folks. Let's go check out the potential in these markets here. Right now, we are off to a flat start for the day. Dow futures up 4 points. They're trading out at 16,425. S&P futures are off a quarter of a point. They're down at 1836. NASDAQ futures, that's the weakest index out here at the moment. It's down 6 points. It's trading out at 3564. Russell 2000 off a point. King dollar back 25 ticks right now. You've got the euro up 63 pips. Goldilocks is back $7. And let's go look at high-ho silver. Let's start off our day. There we go. We got that beautiful William Tell overture out here. So we're going to take a look at silver. That's trading back about 37 cents, nearly about 2% here this morning. And silver, as it made its move early this morning, if you're watching us on TigerTV, what you see here, you see a couple of, and if you just listen on the radio, your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can always catch the archive of this show on Channel 9, and of course you can get the live stream by going to the homepage of TFNN.com. Over in the upper right-hand side, you'll see a button, 3 little smartphone devices. Click on that. This show will stream live, and you'll see the chart we're looking at. You'll see some different lines on my screen out here. Let me describe one of them that we're looking at. Well, let me describe many of them that we are looking at out here. Number one, silver formed a nice little key reversal session out here. It did it back on the trading session here of November 30th, 2012. So if you use the close of that candle, and the close there is at $33.50 out there, that's a good area to really draw a channel line. Now, I'm not going to draw the bottom of the channel, and I'm kind of using this a trend channel line. And the next area that I'm going to use is going to be the open. Did I use the close? Let me make sure I got the right, gave you the right price. The open, I didn't want to use the close, I wanted to use the open. 34.31. I knew that there was too many moving parts here this morning. So on November 30th, go use the open, $34.31 out there. Now, the next area that I'm going to use the open of the session on February 7th. And that open out there is at $31.84. That helps us to identify the channel line that we are using. That's the blue diagonal line that you see on my screen out here. We've only seen high-ho silver get above that level for about 5 or 6 trading sessions. It was back here in the early end of October timeframe, October 22nd, 23rd, through really through November 1st. So October 22nd through the end of the month. And then price dipped right back inside that channel line. Well, this morning, price tried to break above that channel. Thus far, it has held. But that is a key area for us to be watching. Right now, we've got silver traveling in between that channel line and the top of the swing point from June 28th. That's where the battle is going on. That's $19.63. up to, let's call the inter-session high thus far, about $20.18. I don't know which way it's going to break. We just have to sit back and watch. Now, that's the first line of resistance that we want to be paying attention to. If that area cannot be broken, it says more likely than not, especially if you get price to close back inside that June 28th swing point, it says, okay, the run to 1847 would be on. That's the completion of your 1-to-1 A to B equals CD down. You'd be back inside the June 28th swing point, and that would be the message of that market. Now, as we take a look overhead, so we know what the downside, we know in the downside area where silver is likely to head to if it can't bust out the highs. And so far, at the moment, it can't bust it out. If it can bust it out, where is silver going to likely run into its next resistance area? Well, that takes us all the way back into the highs in April in 2011. And there, we're just simply using the open or the close of the sessions back right around the April 29 time frame. And that's the red diagonal line that you see on my screen out here. So we take that red diagonal line. That is the next area of overhead resistance for silver should it break out. Where's that price level? You know, at this stage here, it's probably easier just to give you where the 200-day exponential moving average is. That's at $22.69. We have not seen silver trade above the 200-day exponential moving average since about February in 2013. So not a year, 10 months out there. So that will become the next area of resistance. Now, it's a pretty decent way up there considering we're trading at 1968 right now, but you got to wait for a breakout. My opinion is you should wait for a breakout of one of these areas here. And that would be in high-ho silver. If we go take a look at Goldilocks, when it comes to Goldilocks, you can do the same things. You can take a look at different trend lines, channel lines out here. I'm using the red line on my screen back here. Actually, it's not exactly at that same key reversal session out here, but the top of that price channel right now is probably at a price. Let me put the actual 200-day exponential moving average on here. I probably should have that on my screen, so give me a minute here just to update that. Where's those moving averages? It's got to be right in front of me. Moving average. There we go. That's the black line. Boy, the 200-day exponential moving average when it comes to Goldilocks, 1358 out here. But first, gold is going to have to break this descending price channel. It's probably up around around 1270 or so. What we've got going on inside of Goldilocks right now is the key area for us to be paying attention to and watching is going to be December 19th. The high there is 1226. That's the swing point right now that it's traveling in, that price is traveling in. And until it breaks that, either to the upside or the downside, it's just really a sideways move out here. Now, to the downside move, that sets up your A to B equals CD down or suggests that. If you can break up and close above, not just break above 1226, it has to close above 1226. That says that price will rise into that descending price channel. If it can break through there, well, then the target's going to be, just like in silver, is going to be that 200-day exponential moving average right now, about 1358. Our call-in number is 877-927-6648. If you give me a call, we can take a look at your stock chart. Over in Europe this morning, the FTSE's down 23 points. The DAX is off 37. In Asia last night, you had the Nikkei up 112, the Hang Seng kind of flat, as well as the Shanghai. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Lots of great emails from listeners, clients over the weekend. So thanks for sending all those cards and letters out there. You know, one of the areas that we want to be paying attention to today certainly is also overseas today, tomorrow, and so forth. And really what I've got up on my screen here right now is the FTSE. Now, the FTSE here, let's say it has a similar look, I suppose, to the New York Stock Exchange. Similar in look only in the from the standpoint that it is going to try to take out its 2007 highs out here. Now, the high in the FTSE that we're talking about, it's not an inter-session high, but if we go back to the 2007 area, if you're watching this on Tiger TV, you'll see a couple of dark lines going across the screen. The one up towards the upper portion, if you're watching this on Tiger TV right now, that's the July 13th. This is a weekly chart we're looking at, July 13th, 2007. The high out there is 67.5410. The FTSE has attempted now on 2 occasions, really since back in the 2007 timeframe, it has attempted on, well, we'll call it 3 occasions because last week as well, it's attempting to close over that level. Again, the number is 67.54. It's trading at 67.28 right now. A close above that. You know, the FTSE here has been consolidating as well. It's been a very large consolidation pattern. Now, a close above that, actually, it needs to really, in order to really break the consolidation, it has to get back to its 1999 highs, which is 69.50. But boy, if it can close above the 2007 levels and 2009 highs, they are its next attack target. And then it is a huge consolidation because you're talking from 6,900 down to 3,500 out there. So what does that make it? About a 3,400 point consolidation. A breakout above that is absolutely huge inside of the FTSE out here. At this stage, right now, what we have seen is the 2007 highs have acted as resistance. And if we go take a look at the New York Stock Exchange, let's take a look at the New York Stock Exchange. Let me put this on a monthly chart out here. Where is my New York Stock Exchange? I got one right here. New York Stock Exchange primary trading ranges. Here's what the NYSE is doing right now. It is going to be trying to tackle the 2007 high. That number, 10,387.17. We're only 30 points away from that level, but that's really going to be the key. Now, for it to spike up to 10,430, that would be normal. That's the top of its next primary trading range boundary line that it is trading in. If it can't bust it up, what we'll likely see is a pullback maybe to the bottom of that October 30th candle out here, right around the price point of about 98.24. So 98.24, 99.38, that would be a normal area for price to potentially pull back and try to mount another charge to head up. Likewise, if we get a close above 10,387, in fact, if we get a close above that this month here in December, 2 more trading sessions left for the month of December. That'll be an important message, especially if in January price pulls back, tests it, and rejects that area, because then the NYSE will follow suit with all of the rest of the indexes, meaning the Dow, the S&P, the Russell, the in the composite, obviously, it's a breakout in the composite, but the composite going back towards its 2,000 highs out there. So we'll pay attention to both the FTSE as well as the New York Stock Exchange and many, many, many other things. Now, in one of the emails that was sent to me over the weekend, let's see if I've got it out here. I think I was looking at it over the weekend. The question was, because this was somebody who trades the Gartley patterns, and this is someone who was trading Gartley patterns, trades them in the currency market. This individual had mapped out the Gartley sell pattern that took place inside of the euro. Was using a 30-minute chart out here, and that's what I've got up on my screen. And a Gartley buy, a Gartley sell pattern. What you're looking for is first the completion of an A to B equals CD. That's all that H.M. Gartley required. And the A point in this case here is going to be about 1 o'clock in the morning, December the 20th. That's your A point. Your B point is going to be at about 11 o'clock in the morning on December 23rd, at about 1:37, 1:58. Your C point pulls all the way down into the level of 10 o'clock in the morning on December 24th. The 1-to-1 A to B equals CD. The number came out to 1.3745. The actual high, where this individual went short, came in at 1.3744. You got to love that. I mean, that's the completion. That's how you like to see an A to B equals CD completed. Well, that's one of the ways. Remember, A to B equals CD patterns only complete the 1-to-1 60% of the time. The key is understanding the other 40%. Now, this individual actually went short at this stage here. And the question was, what was it that was overlooked? Why did the trade not work out? Because it was a perfect Gartley sell. Folks, what didn't make it perfect was there were no bulls or really no bearish signs out there that was the end of the move, and you came up into that D point with a wide-ranging bar out there. Wide-ranging bars usually signals that a market does not end on a wide-ranging bar. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow up 12 points, trade out at 16,490. S&P is flat. It's up 22 cents, trading at 1841. Composite down 5 points. That is the weak link at the moment. It's trading out at 41.50. Russell 2000 is flat. It's trading at 11.60. Apple down about $5 right now. Microsoft up 14 cents. Google back 22 pennies. Leading the charge to the upside, it is Candy Technology. KNDI is its ticker symbol. It's up 20%. It's up $2 and a change out here. I don't see any news behind it. You've got Oramed Pharmaceuticals up $2. Intercloud Systems up $1.70. Disney, Walt Disney's up $1 right now. 3D Systems up about $1. To the downside, Apple leading the charge, having a little bite out of its Apple this morning, off about 0.8%. Twitter is off $4 this morning. It's trading out at $59 and change. Myriad Genetics off 3%. That's down 12%. Vision China Media, VISN, is a ticker symbol. They're down about 12% this morning. Facebook off $1, a little over 1%. Accenture PLC down 1% as well. Again, our call number is 877-927-6648. So let's go back to that Euro chart. Again, it's a 3-minute chart, but you can learn a ton from it. And I do appreciate the listener sending in a question and saying, hey, what can you teach me from this? Why did that pattern fail? What is it that I missed out here? And a couple of couple of other comments from inside the den. So we're looking at the euro-US dollar currency pair. Really formed a great little Gartley sell pattern. Now, the cool thing about these Gartley patterns is they're leading indicators, meaning that they are patterns that you can draw ahead of time. And you can draw ahead of time because number one, you're allowing the market to give you all the information, do 75% of the work for you. So all you need to do is focus on that other 25%. And that's why I really want you to become a master of it. I have a workshop called Buying and Selling the D Point. That is a requirement. That is a prerequisite in order to be able to trade the Gartley patterns, whether they're buy, sells, or whether they're butterfly patterns out there. Because without doing that, you're leaving a lot, you're taking a lot of bread off your own table, and you don't want to do that here. Now, an A to B equals C, we drew that ahead of time, and we drew that ahead of time. Well, you can draw that ahead of time because you have your A point. Your A point down here, we talked about, that was one on December 20th. That was at about the 136 level. Your B point again back here on, December 23rd, about 11 o'clock in the morning, your C point. And it made a 70% retracement. It doesn't have to be a 618 or 786, but it made a retracement and started moving higher. That made it very easy to identify your A to B equals CD options. Your 1-to-1 is where this one originally completed. Now, what you've also got is you've got your swing point. So you just simply use your ruler. Many of you don't have, if you're not using the Ensign software, you don't have the ability to color in the beautiful Gartley patterns out here. But you certainly have a retracement ruler on your system. And if you go from the swing point high, which is about the price of 138.10, that came in on 3 o'clock in the afternoon. That was on December 18th, all the way down to where our A point began of the A to B equals CD up. And that was really potentially a counter trend move out here, right? Yes, potentially a counter trend move out here. So the 0.618 level, that came in right at 137.41. So, it hit perfectly. But what that did not have was any kind of reversal signal. Bulls and bears are out making signs every moment of every day on every time frame that you trade. In this case here, if you're trading a 30-minute chart, yes, it was in that extreme oversold or overbought condition, just using that 14-period RSI. However, in a bullish market, things will stay overbought. In a bullish market, things will stay oversold for longer periods of time. But it just says, hey, beware. Now, just because a candlestick shows up as being red on my screen, that does not mean it's a bearish reversal signal. It only means that price closed below where it opened during whatever the time frame it is that I'm looking at on the chart. Likewise, a green candle is not bullish. A green candle just says the price closed above the open. Because when you take a look at candlesticks, you've got the body, which is the essence of price. So that's the open and close, and that's the color shaded in area. And then you've got the extreme emotions, and those are the wicks, those are the shadows, those are the upper and lower shadows. They have some meaning, but not as much as the body of the candle. In this case here, you're coming in, you're forming that Gartley sell pattern out there. Yeah, you have one little small red candle, but remember, it's the body of this entire candle, quite frankly, that is key out here. And that was the one that formed at 22:30. What's that make it about? My math is good out here. Was that 22:30 would be 10:30 in the evening, or 10:30 in the evening out here. So 10:30 in the evening, we got no bearish reversal signal. In fact, what we had was when you get a close above the actual body of that session, it's a continuation pattern. And that's a continuation pattern calling the rising 3. That's the rising 3 pattern. That was telling you that price likely wanted to go to the next level. What's that next level? You've always heard the comment, hey, let's take things to the next level. Well, when it comes to trading, taking things to the next level on a 0.618 Gartley buy or sell, in this case here was a sell pattern, that next level is the 0.786. So let's go ahead and let's get rid of the 0.618. Let's draw in the 0.786 Gartley sell pattern. Let's see, that 0.786 Gartley sell pattern, did that give us a reason to go ahead and take that trade right then and there? Let me get rid of the Fibonacci levels. So we can see the 0.618, it fails. Never had a bullish or bearish reversal signal. Moves up to the very next level. Where's that? To the 0.786. And as it came up into that level, was coming up with what? Another wide-ranging bar. The one that took place here at 2 o'clock in the morning out here. Comes in with another wide-ranging bar. What do you have? A small little bodied candle out here. Another red candle, almost looked like the same one that took place at 2,300 hours on the euro. And then what's it do? You get a close above it. Another continuation move to the upside. And with what? A wide-ranging bar. The very first time that, in fact, if you take a look at the expansion here of price, if you go between swing points, it did not make the full 1.272 expansion. Of course, this was a failed 0.786 Gartley. And when a 0.786 Gartley fails, it often turns into 1.272. That says the 138.61. Of course, you would have had to have known what was going on a larger term chart in the weekly chart to know that maybe it couldn't make it all the way up there because of long-term resistance out here. But the bears actually did show up inside of the euro. They showed up right here with this little dark cloud cover candle. That took place at 8:30 in the morning. That was on December 27th. You had some additional follow-through right here. So just because you have a Gartley buy or sell pattern, that doesn't mean that you've got an auto trade. You would not put that on autopilot. You want to make sure that you understand reversal signals. Not all candles have the same meaning out there. So if you'd like to master that, go click on my name, Steve Rhodes, on the homepage at TFNN.com, on the Trader's Edge, on the Money Masters Show. It'll take you to a little homepage of mine that's got buying and selling the D-point, or send me an email. We can talk by the phone out there. If you'd like to master it, I'd like to be able to teach you how to master it, but don't just take those patterns just, in fact, because they set up that way. So that was on the Euro US dollar. Now, that was on a 30-minute chart out here. Let's go switch over. Let's take a look at the Euro US dollar, and let's do that here. We'll come back to the Japanese yen because there's a good chart. There's something to learn about. Here, when we take a look at the Euro US dollar, you can see that it has been in a descending price channel. That's one, as you know, if you listen, this one goes back into the 2008 time frame. Perhaps by now you're tired of hearing me say that, but nonetheless, if you put it together with what was going on inside that 30-minute chart, you would have also recognized that on the weekly, on the daily, depending if you had your chart notations here, that probably the euro being able to make that 1.272 expansion, that was going to be a tough thing to do because it would have meant it would have had to break above the trend line going back to 2008, which it hasn't done. Doesn't mean it can't do it. In fact, we want to be watching it because right now, since last night, the euro, again, it is the ever-ready bunny that does not want to give up. It is trying, and it's going to make another attempt to look like this week to try to bust through the trend line. Right now, it is up and over. It's a weekly chart, so the week has just started. Got a lot of time left in the week, don't we? We most certainly do. But right now, it's traveling above the descending price channel from 2008. If this thing breaks above that black diagonal line out there, that says the euro wants to move higher. 140, 1.4013 out there would be its next target. Actually, even a bit higher than that. I would have to say it'd have to go all the way up to the last time we saw any kind of resistance at a swing point. That would take it back to October 28, 2011, right around the 142.4. Of course, that would put some pressure on the U.S. dollar index out here. I'm not saying that's what's going to happen. I'm saying that all the lines are drawn. This one becomes a pretty easy battle to be watching. I say right now with the euro where it's at, it becomes pretty tough to actually even trade this currency pair at the moment, other than on an intraday time frame out here, because it just will not give up the fight to try to bust out. Now, speaking of busting out and trends that can be broken, well, that takes us over here to the monthly chart of the U.S. dollar Japanese yen. We now have a clear breakout of a downtrend channel. This one is clear. This one takes you back to 1998, folks. So whereas the descending price channel did act as resistance when the euro made its, not the euro, but the Japanese yen, U.S. dollar, Japanese yen, that currency pair made its move back in May in 2013. You can see price stopped dead in its tracks as it got up there in that first attempt. Well, this has made the pole vault. It has been able to clear the high bar, and that is the bottom, or that is the top of the descending price channel. So the U.S. dollar, Japanese yen, is going to run to higher price. Where is that higher price? Well, look, 108.99 is the next primary trading range boundary line. Let's start taking a look at a couple of fib numbers. Let's see if we have any convergence of Fibonacci numbers. Let's go from a high that occurred back in 2007, and you can see that right now it's trading right at that 0.618 level. That's coming off of the June 30th, 2007 number. That's 124.13. It's made the 0.618 retracement. 105.57 is its number. It's gotten up to a high of 105.40 out there. Now, just because it hit the 0.618 level, is that a reason to go ahead and go short this currency pair? Only if you like to live dangerously, only if you like to be on a tight wire out here. Because what the U.S. dollar, Japanese yen has done, folks, it has broken. Did I say broken? It has broken a long-term, this goes back to 1998, it has broken a long-term rising price channel. Has it broken it before? Yes, once before we saw that break. That break took place right here, May 31st, 2007. Went up just for one more month into the June time frame, and then we saw that little bearish engulfing candle. Price got back inside of the descending price channel. At this stage, what one should be looking for, because momentum is here, there is a breakout. One should be looking for more upside potential of the U.S. dollar, Japanese yen. I would say don't try to trade this to the short side out here. I would say look for some type of A to B equals CD pattern to the downside, because this is telling us that it wants to break. Granted, it's got some overhead resistance of that 0.618 level. Let's take a look and let's come to another swing point. Let's see if we've got any convergence here. That would be coming back to 2002, January of 2002. We go from that level down to the low that came in back here in October. Where is the 0.382? Let's see if I can find a red color out here, because I got lots of lines. Even it's confusing Steve-Rhodes on here. Yeah, it's kind of a tough one to read there. Let me see. Come on, I got to have some red somewhere. Got to have some red. Where's the red? Apparently the red is not around much. The 0.382. Well, it's well above the 0.382 retracement. Let's come all the way back to 1998. Let's see what kind of retracement the U.S. dollar Japanese yen currency pair. Now I'm coming back to 147.6, 1998. Pretty sure I was over in Japan during that time period. In fact, had a retail store over there in Osaka. So if we take a look at the 0.3, even above the right now, even on that longer term trend, what the U.S. dollar Japanese yen has done is above the 0.382 level on that. So we've got a real breakout that is taking place here inside of the U.S. dollar Japanese yen. If we go down and take a look at a shorter term time frame chart out here, let's see if we can find any A to B equals CD patterns or anything on the U.S. dollar Japanese yen. See what we've got as a setup out here. Maybe you've got an A to B equals CD down. That could be forming out here. The A point on this, you could use the high of about 130 coming in this morning, and that was at a price point of about 105.39. Your B point on this could be the low here at 6:30 this morning, out at 105.10, and your C point that could take place at about 8:30 or so. We'll see if that's the A to B equals CD that forms out here. But the U.S. dollar Japanese yen, I would be looking to play this to the upside. Oh, geez, I pulled this off to the left. If we take a look at a pattern here that should have held. So here on the intraday chart, you've got a 3 drive to a top pattern. Kind of textbook on this one. This textbook shows an expansion, a 1.618 expansion from drive 1 to drive 2 if you're watching us on TigerTV, and then a 1.272 expansion from drive 2 to drive 3 out here. And we see that price has broken above that. Not just did it break above it, it gapped above it, and it did that at about 1 o'clock in the morning back on January 26th out here. So a pattern that should have really held on the intraday charts as a reversal has failed. That is on the U.S. dollar, Japanese yen. Now let's go check out our. Let's go check out the futures market out here. Right now, flat market, except for the composite. I have mentioned that the composite has been the weakest index thus far. If we take a look at the daily chart here for the futures contract here, I'm going to pull up the NQ, and we're going to see that last week what it did was it formed a little bearish engulfing candle right here. We're seeing a little bit of follow through. Again, this is a daily chart. So on Friday, formed a key reversal session, formed a bearish reversal signal, a bearish engulfing as well. A little bit of follow through this morning. We'll take a look at that 120-minute chart, because that 120-minute chart shows that the trend is actually changing to the downside. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, relatively quiet market out here. And, you know, we could probably expect that for the next couple of days out here. It is the end of the year, has been a heck of a year out there. If we take a look at things that are popping and dropping here in the marketplace right now, leading the charts, the upside, you've got Renaissance Air. RNR is a ticker symbol. They're the leader in the clubhouse. They're up about $3. You got Barracuda Networks. CUDA is their ticker symbol. Up 266. 3D Systems up about $2. Disney's up $1.76. Priceline leading the charge. The downside, it's off a little over 1% here, down 15 points. Certainly impacting the NASDAQ. The NQ's out here. Apple's off $5. You've got Netflix is down $5 right now. And when you take a look at the NQ here, this is the 120-minute chart on our screen. We went into the caution area Inside the NASDAQ, this is the Rhodes Momentum Indicator screen. If you're watching us here on TigerTV, as soon as you get into that yellow area, that becomes your cautionary sign. Means to really make sure that you've tightened up your stops if you are long in a trade out here. Got a nice little bearish engulfing candle that took place. That was at 10 o'clock in the morning. That was on December 27th out there. So we also had, if you're watching us on the on Tiger TV here, you can see we also had a price relative strength divergence pattern out here. In fact, I'll cover those a little bit more. A number of the emails that I got in over the weekend, many of them having to do with, hey, the long-term outlook being in a bullish mode. Some folks saying, hey, why not just jump in and just be long and strong out there. You know, it's always your entry area that's very key, and so it always depends on the time frame horizon that you are trading on. Look, if you are trading long-term money, what you need to do is stay within a long-term chart to make sure that you determine your entry points inside of trades out here. Just a number of questions. Is there because of so much discussion about a major market top and things of that sort? So you know what we'll do during the next show. So stay tuned for the next show. We'll spend some time. We'll go back and take a look at the past. Not that the past has to equal the future, but we'll go back. We'll study the Dow. We'll take a look at the Dow. We'll go back to 1928-29. We'll take a look at that crash cycle, because you see, there are patterns out here that we want to pay attention to that are more telling than what I consider to be everything else that most folks talk about when it comes to being able to identify these events well ahead of time. And one of those is this price relative strength divergence pattern, and it works on all time frames. Of course, you need to understand how to trade it. Just because a Gartley pattern sets up, that doesn't mean you take the trade, and just because a price relative strength pattern sets up does not mean that you take the trade out here. But in the case here, in the case of the NQ, it did form that pattern. It did give us a confirmation. We did have a little bearish engulfing candle, and then you actually got a little sell signal that took place here coming into the close on Friday. A little bit of follow through, after really at the close on Friday, and now we're seeing here that inside 120-minute chart, inside the NQ, it is under selling pressure. It's now switched into the actual sell zone out here. Of course, in the 120-minute chart, that sell zone will turn into a buy mode if you see a close above 35.70.50. So, if one is short the NQ, I would be very careful. I'd be looking to make sure your stop was in place on a close above. As we speak here right now, this number will change during the day, but a close above 35.70.50 would go ahead and negate that pattern. Folks, if you're off to start your Monday, have a marvelous Monday. Thanks so much for joining us. Always remember, know your potential. Take some massive action. You'll get some results. Good or bad, you'll get results. And that will go ahead and reinforce your belief system out there. Have a great Monday. Look forward to speaking to you soon. Take care, folks. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.